for crypto.
Oh, interesting. That's fascinating, guys. Thanks for explaining. I know I think we're already at 30 minutes or so in the cast. Maybe jump over to macro roundup. I know Bitcoin, Ethereum had a pretty sizable rally. Seems like inflation seems to be coming in a little bit lighter than what people expected. I also saw the University of Michigan came out with their inflation expectations, which came in a lot softer than expectations. Seems like to be honest, I remember that a year ago we were as things were heating up on the inflation side, people were talking about the Fed's going to raise rates aggressively, and then by end of year there's going to be growing expectations of a Fed pivot. That seems to be playing out still, and it seems like it could be pretty fruitful for the crypto market if inflation does continue to come in under expectations.
Yeah, I mean, I think we saw the start of that play yesterday, and it's kind of continued a bit today. Definitely a risk on across all asset classes yesterday, not just crypto. Yeah.
I think for me, I think we've seen this play before, right? We get really amped up about news on the CPI front. Like this happened to us in October. This happened to us like a couple times where you get amped up. You're like, oh man, inflation's coming down. This is fantastic. And then the market rallies because there's nothing to stop it. And then suddenly you get to the next FOMC minutes or sometime like Powell. I think everyone needs to understand that Jerome Powell is deathly afraid of a repeat of what happened in the 70s with Paul Volcker. And what they're really afraid of is them responding too quickly to inflation getting under control. If they start cutting and then they get a double top in inflation, then they're fucked. Like Paul Volcker had to take rates up to like 18% in order to combat that second hump. And Jerome Powell explicitly said, we know how to fix markets, right? We know that we've got the tools at our disposal to fix them. So we want to err on the side of breaking markets by keeping rates higher for longer. And he actually explicitly said this, two FOMC minutes ago. He's like, we know exactly how to fix markets, so we want to err on the side of breaking them. So I think if people are being too optimistic about Fed pivot right now, they're going to prepare to get their world hurt the next time Jerome Powell opens his mouth. So I'm cautiously optimistic, but I am sort of like, I think that we've seen the bottom, as I predicted on our prediction show. I don't think that we're going to retrace much further back. But that being said, I'd be cautious for people buying the whole like off the races, it's time to moon type of situation until the Fed actually does put their money where their mouth is.
I mean, the dots for next year are still over 5%. I think it's 5.1. The 25%, 25 bip hike is pretty much all but priced in Fed. Mm-hmm. I think they would be surprised if it was 50 now, but they could still do that, right? It's still in line, taking them to 5%, and then maybe the next one would be 25. But the issue is if people get too excited now, it actually makes their reason to hike even more because the yield will come down, and that's the exact opposite of what they're trying to do. It's a delicate balance. I think it's Carlos rightly put. It's probably a bit early to be like, we're definitely all done, and this is it.
So Matt, what
don't
you're
get me wrong.
me is...
I like it. I like it when the price of Bitcoin and Ethereum goes up. That makes me happy in many places. But I'm cautiously optimistic about where we stand with that. I mean, because let's dive into the number just really quickly and look at the components that, and this isn't secret. This is exactly what Jerome Powell said. This is how I look at it. So they break up CPI into really three things. The first is goods, right? And so you're getting the price of goods going down, except for maybe eggs. But there are some structural sort of like post-pandemic tailwinds that we're getting.
Can I just ask that? What is so special about eggs?
No fucking idea. Although, I mean, I like eggs. I feel like I need to have you guys over so I can cook you guys an omelet. One of my pandemic guilty pleasures was learning how to make a nice French omelet. So Maybe I've been going overboard on that. I have no idea.
My wife buys these. These,
someone's doing all right, offering out the eggs.
Yeah. My wife buys these eggs that are like $7 for a dozen. It's like some of these like
the higher Bitcoin goes, the more generous I get with my my eggs, boys.
Sorry for that.
Only the best range-free organic. This chicken was named Fred, and we fucking love him. Eggs are purchased in the Zendejas household as long as Bitcoin's above 18,000. But
brunch at Carlos's house.
Exactly. So goods are going down, but there's a very good reason for that. Like the supply chain is kind of cooling off. You've got China coming back online. There's a number of things that make goods kind of come down. Shelter is the other component that they look at, but that's sort of like a lagging indicator, right? Like the leases and people's housing costs don't change very dynamically. So that can take 6 months to a year to really flow through the system. And that's the one portion of CPI that's still kind of high. And then you have what's called services X shelter. So that's what Jerome Powell says I'm really fucking looking at. And if you look at like month over month, expectations on that portion, we're pretty much down to like the 2.5% to 3% range, which is a really good thing. And so I think it stimulates that everything's kind of moving in the right direction. And the only portion of CPI that looks not great is the shelter portion, but all the leading indicators for that, such as like lumber prices, new home starts, suggest that that's going to come down shortly too. The only thing that I think could cause like a real problem would be wages. Because I think you kind of end up with this dual-headed thing where it's like the wage inflation is not fully a cyclical thing. There is a secular trend in that, in the sense that we're seeing the largest generation in the history of the United States, the baby boomers, have all reached retirement age as of this year. And so you're seeing a lot of workforce come offline, and there's not that many people to replace them comparatively. Like the millennials have already been in the workforce for the last decade, right? Gen X is not very large, and Gen Z is also not very large. So when you have a massive amount of people come online, there's bound to be a little bit of inflation. So that's the one thing that kind of scares me, is you might have this like pesky wage inflation that kind of like kicks in, because we're just not seeing a whole lot of workforce participation. And those are the numbers that have been the stickiest if you look at like the economic releases that have been happening over the last little bit. And so if that's what Powell's watching, they might keep the rates higher for longer, because as previously stated, they'd rather err on the side of caution. So if they're not seeing exactly what they want, they're likely to sit around and keep them higher for longer. So, I mean, like I said, I'm still cautiously optimistic. I like the fact that, and I predicted on the last thing that I think they'll end up pivoting H2. But I wouldn't price in anything immediate, because I think they still need to see some aspects of the economy break a little bit before they really go into full pivot mode.
Yeah. There's so many talking heads, and there's so much news, like noise that comes out about this every 10 minutes, it feels like. It's kind of interesting to look at overall overreaching trends and consensus around what the Fed is going to do, what will inflation look like. And so it's kind of like, it's interesting to look at, if you look at like more like 6 month segments, like what was consensus view 12 months ago? Like what was consensus view 6 months ago? It feels like in general, like people thought that we were going to reach the peak of the Fed rate hiking cycle right around now, like Q4, Q1. I think the one thing, at least, and this is, I think the one thing that has changed though is how long the Fed is going to maintain those high interest rates, where people might have been thinking they could do a abrupt turn and start cutting rates, where that seems like a lot less likely. So I feel like that's really just like the one big change that we've seen in consensus views around inflation and Fed rate hikes.
Yeah, I think my only piece of advice on that is the Fed has been wrong a lot. But they've shown that even when they're wrong, they generally tend to stick to their guns until they're forced to not do so. No, seriously, like Jerome Powell's been pretty good about giving forward guidance and then doing that thing.
Yeah.
And the other secret weapon that I tell everyone that will listen is follow Nick Timiraos on Twitter. So he's the staff economist at the New York Times. I'm fairly certain that the Fed uses him as basically a way to test ideas for public perception before they actually release them. So they likely have a WhatsApp group or whatever secret version of WhatsApp they use at the government to be like, hey, this is what we're doing. You want to post a little something, post an opinion piece on the Wall Street Journal and see how the market reacts.
Yeah, how many hashtags. I mean,
it's a time-honored management practice. I know, like, for example, when we were at Deutsche Bank would very, very, very frequently release. It's like, hey, we're planning on doing this thing, and then seeing how the market reacted to the stock price to see if it was a good idea to do that thing. So it not surprise me that that's what the Fed is actually doing right now. But seriously, I mean, listening to Jerome Powell himself is probably the best thing you can do, and the second best thing you can do is to follow Nick Timiraos on Twitter.
Excellent. I need to. I don't think I follow him. I mostly just follow, Beyonce and some of the former Spice Girls.
You got to be well rounded.
Yeah, true.
Lord knows I love me some Ginger Spice.
You heard it here first, folks, at the DQ Cast.
That's like totally wrong Spice Girl. It's posh all the way.